But I do think that there is a very substantial still chance ahead of us of that, much more pain to come. Don't underestimate Trump shock. You cannot rewire the entire global financial system and expect, just a few mild corrections along the way, or even just sort of flirting with a bear market for a day on the S&P 500, right? That's nowhere near the kind of pain that actually succeeding at changing the global financial order would cause along the way.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 14th through April 21st, 2025, while supplies last. First this week, we feature 1-ounce silver Canadian maples at their lowest premium in years at just $3.49 over spot. Next, 1-ounce gold Philharmonics are only $65 over spot. 1 10th-ounce Platinum Britannia are just $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is the independent speculator, Lobo Tiggre. Lobo, thank you so much for joining us today.
Always happy to, Elijah.
Well, it's great to have you on today. We really appreciate you taking the time. I did want to discuss Powell's statements, that his, the warning about the economy and inflation. Your take on this, and I guess we'll then get, your take also on how this is going to be impacting the markets going forward.
Sure. I'm not one for much arm waving and jumping up and down, but that really was extraordinary. The Fed never predicts a recession. I mean, central banks in general don't. I think Andrew Bailey at the B of E is the only one I can even remember ever coming close, right? So for the Fed to issue this kind of warning, and, couched in all kinds of calming terms of it's transitory, it's just the tariffs, it's not our fault. Great scapegoat there. But it's still, the fact is he's done it, right? He has warned both of the stag and the inflation that he earlier said he didn't see signs of either. So, and the really extraordinary thing is, if it would be one thing if he was just saying, I think we might have some inflation we'll have to deal with, because they think they have a tool for that. Or it might be another if he said, I think we're going to have some economic weakness in the jobs or market or whatever, because they have the tool for dealing with that. But if you have economic weakness and high inflation at the same time, they have no tool for dealing with that. When he was asked about how the Fed would deal with stagflation, and an unusual question a couple interviews ago or Fed days ago, he said, our plan is not to let it happen, not to have it. Because they know that, their tool of fiddling with interest rates is one tool. It goes one way or the other in their model. So for him to even admit that this was possible, and of course he didn't predict stagflation, he didn't use that word, but he said that the Fed's dual mandate, jobs versus prices, could come into tension. That is in Fed speak, that is a jumping up and down, waving red flags alarm button. And, I'm not surprised that the markets had a very volatile day that day. But if anything, I think they're underestimating the importance of what Powell just said. And I know in our audience, a lot of people don't believe anything Powell says. And no, I'm not saying I believe suddenly that Powell has become a fountain of truth. But let's put it this way. He wouldn't say anything even remotely like this unless he was pretty darn sure that something wicked this way comes. I mean, if everything was, probably okay and there's very, very little probability of a problem, why would he even go there? If he says, though, that everything's fine, that we're strong and resilient that we keep hearing about, right? And next month, it turns out that, inflation comes screaming back, all because of the tariffs, of course, but labor weakens at the same time, all because of Trump, of course. But if these things happen just after he says everything's fine, he looks like a fool. The Fed loses all credibility. And, he has already lost credibility with you and me, my friend. But when I say credibility, or when the markets talk about Fed credibility, they're talking about the bond market vigilantes, if you will, right? If the Fed's tools no longer have their desired impact on the bond markets and therefore interest rates, that's a serious problem for the Fed. So I think he was pretty much forced by reality to give this warning. And I think all investors, not just, metals investors, should pay very careful attention to this.
No, I think it's a good point you make how, obviously Powell, we don't necessarily trust what Powell says, but that if he's warning about this, there must be something even maybe worse coming. So I guess your outlook for the economy going forward, inflation, I mean, do we see this stagflationary environment, and how bad do you think it's going to get?
Hard to say. I keep saying, amongst others, I'm not the only one, that we're in uncharted waters. So it would be pretty arrogant for me to then proceed to whip out a chart and say, okay, here's where I think we're going, right? I do think, sort of pulling back to the even bigger macro, I do think that the long-term consequences of all the COVID lockdowns and all the trillions of spending that have never stopped, right? That is inflationary regardless of this. If Trump shock adds even more labor market weakness to what we would otherwise see, then, that can exacerbate the stagflationary outcome. Let me just say two things. So, I don't have a price target here to give you, or I don't have a number to give you. And I think that on the one, I was going to say hand, but we'll have pause. So on one paw, the stagflation is going to remind everybody of the 1970s. And I'm sure that feeds into gold, or, gold and silver, because everybody remembers what happened in the 1970s. But there's no law of economics that says that every stagflationary event will be similar, or that they're all the same. I mean, this clearly is quite different. I mean, you could say, oh, well, we had oil shock in the 1970s. Now we have Trump shock now. But they're very different things. I mean, oil shock was a price shock on an important economic input. Trump shock is Trump trying to, for better or for worse, I mean, even if you agree with him, I think you'll agree with me that what he's doing is attempting major surgery on the entire global economic order to put America first, as he says. Agree with that or disagree with that. That is a huge thing that is shocking to the system, and it will have powerful repercussions for years to come. That would happen if he stopped today. Just upsetting the apple cart, as he has done, has already unleashed all kinds of uncertainty, and it has all kinds of players on the international stage, looking to reroute, rewire, or at the very least back up their systems so as not to rely so much on the U.S. anymore. So this is very different from what happened before. But, what else are people going to compare to? So without giving you specific targets, I'll be happy if I'm right about the general outline of we still have, highly inflationary trends in place. And then we also have, I would say we had signs of economic weakness before. You and I have talked about them for years. They never produced an official recession, arguably a rolling recession. And now we may get a recession, even if it's short-lived because of Trump shock. So I think it's reasonable for people to, or rather, lacking any others, North Star to guide by. And even if the charts are broken because we're in uncharted waters, people are going to remember what happened in the 70s. So I think that's relevant. But I do think it's dangerous to assume that things will look just like the 70s. Circumstances are very different. And particularly for, our favorite monetary metal, gold. I mean, I guess I shouldn't presume that. You may love silver more than gold. I don't know what your personal preference is there, Elijah. But as money right now, gold takes the prize, in my view. And we have to remember that in the 1970s situation, gold was coming off of price control, right? Gold, rather, the dollar was defined as a certain amount of gold, and that went away when Richard Nixon closed the gold window in 1971. That's not the case now. And we're going into this situation. It's over 3,300 now as you and I speak, but it was, I forget where it was, on January 20, whatever, but it was in the high 2000s. So you can't really say that we were starting at, this price control level that was artificially low. You could say it was artificially low, but not like that. So it's a very different circumstance. And this may sound like I'm not being very helpful. What people want is, here's the answer. Do this. You'll make a fortune, right? But if I say that and I'm wrong, then I don't do you any favors. I think I'm I'm better served, particularly for gold bugs and silver bugs, to warn them that assuming that anything will look just like the 70s is a huge mistake. But you know what? You can't go broke owning bullion. I mean, that's not a speculation. It's not even an investment. That's savings. What we do with the gold stocks, that sort of thing, that's different. We can go there if you want.
Well, I would like to get into the stock market, I guess, first, and we can get into the mining stocks as well. Last time we had you on, you were warning about the bad economic data and possibly waterfall decline in stocks and a momentary waterfall decline in gold. It seems like over the last couple of weeks, we've seen that gold's recovered pretty much immediately there, new all-time highs now. But I guess your perspective on the general stock market right now, are we, all the way through the woods at this point, or do you expect further declines to come?
Yeah, the anarchist in me keeps on seeing the next recession and the next market crash around the corner. The silver beard speculator in me, like every time I've been sure that was coming, I've been wrong, except for once in twice. I was sure the markets were gonna take it on the chin in 2020. And then 2008. But every other year that hasn't happened. Every other year there's been reasons to think, man, this can't go on, right? So I'm very reluctant to say that. That said, the powder keg is there, and there certainly are sparks going off all around. So I do not want to tell the audience that, hey, we've already had our crash and that's it. It's safe. That absolutely I won't say. I don't want to be the one saying, yes, the market is, we're going to have an official, I don't want to mince words here. The odds are not just non-zero. The odds are not just, some vague possibility. I think there is substantial risk of at least a 2020, if not 2008 scale event here. I don't think a 1929 level event is in the cards, because I think the powers that be will flood the world with as much money as it takes to reflate, which was not done back then when you had to back your money with gold. So I don't see something as protracted as that. But I do think that there is a very substantial still chance ahead of us of that, much more pain to come. I mean, don't underestimate Trump shock. You cannot rewire the entire global financial system and expect, just a few mild corrections along the way, or even just sort of flirting with a bear market for a day on the S&P 500, right? That's nowhere near the kind of pain that actually succeeding at changing the global financial order would cause along the way. That said, we have years and years of the Fed training investors that if there's trouble, will come to the rescue. Some Fed, I'm not sure if there are voting members or not this year, but various different Fed spokespersons have said recently that, of course, if there's systemic risk, the Fed is ready to come in to the rescue. The markets know that. Again, I'm not being very helpful. I wish I could say, Elijah, this is what will happen, right? But the thing is, I have to be right if I say that. There's an either-or option here. I cannot tell you, and I wouldn't believe anybody who did tell you they knew exactly which it would be. I can tell you that not just, saving in bullion, because, we know that, everybody knows that, but accumulating cash in a circumstance like this is not a mistake. Let's say the bottom is in, right? And just, Trump shock, the worst has come, Trump's walked back his reciprocal tariffs. All these deals are made and announced soon, and we all, hug and kiss and sing kumbaya, and it's all happy, happy, joy, joy from here somehow, except for China. We'll ignore China. Somehow that doesn't matter anymore. Yeah, everything's fine. If that happens, we're looking at a multi-year bull market. Remember that Congress, the conservative fiscal hawks in Congress have just voted to lift the debt ceiling for years. All right, trillions and trillions. This is highly inflationary. So there are literally years ahead to make money if we are cautious now. You don't have to race to get ahead of this. You don't have to time the market. You can't go broke accumulating cash. I mean, just look at what Warren Buffett does. And I know a lot of gold bugs don't like Warren Buffett because of the pet rock remarks and so on. But, you know, he knows how to make money in the markets. And what's his portfolio doing? It's going like this to cash. Sorry. You know, it's the cash component is literally going vertical in Buffett's portfolio. Like Doug Casey calls him an idiot savant. So like, even if you don't like him, he does have that savant component going in the markets, and you ignore that at your own peril. So I'm personally accumulating cash, and I have a short list. You know, we've talked about things that I'm looking forward to buying in the turmoil that I get ahead. And what I'm saying is you won't go broke collecting cash. If we do get a market crash or even just more volatility, more correction, you know, a bear market without a crash, but just still more weakness, you'll be happy to have that cash to deploy in that market. And if not, well, okay, we missed the bottom, but we still have the cash and we can still participate in what will be, I think, you know, years of opportunities ahead.
Now, when it comes to the precious metal markets and also the mining stocks, there seems to be a risk here when it comes to when we see a market crash in the general stock market. It often, you know, triggers margin calls, and we see a waterfall decline right in gold and mining stocks and all of that as well. It seems like we saw that initially, but gold is now at all-time highs again. Mining stocks seem to be doing pretty well. Your take on the current state, and what kind of risk do you see going forward if we do see a market crash? Do you see a lot of downside potential in the miners, or not so much at the moment?
Yes, I do. Let's not mince words here. And you use the word crash. We're not talking about another. I mean, what we saw in the last week or two, that was just I think a relatively minor fluctuation. You know, gold corrected, what, $100 or something from top to bottom. That was not a big deal. Not when you're close to 3,000, right? At $500 gold, $100 correction would have been a pretty darn big deal. Not where we are now. If we get an actual crash, yes, I have no doubt, even if it, would seem to be that's when gold should shine and soar as a safe haven value, liquidity doesn't care. The margin call doesn't care. When the margin clerk is selling your stocks for you, he doesn't care, or she doesn't care, right? So yes, if we get an actual crash, yes, I do think everything gets whacked, including gold, which is actually one reason to accumulate cash, because I was able to buy, but not just stocks. We always tell readers first, and that was even true back in my Casey's days before doing our own money in the market. And I put out a shopping list. I kid you not. I researched it in November of 2008, and I published it at the beginning of December 2008. And by the time I was able to buy those stocks, the gold had already pulled a V-shaped bottom. And if you recall, gold actually ended the year in the black in 2008, and that happened in that December. And so by the time I was able to buy, the stocks were already up. I didn't want to chase them. Markets had been going down, right? And by the end of December, they're like doubled or something. Anyway, the point of the story is, I want to have cash, and I want to be liquid, and I want to be ready to deploy should we be so lucky as to get that opportunity, because absolutely no question in my mind at all, Elijah, if there's a broader market cap crash and it affects gold, silver, and the stocks, that will be very brief, and that will be something that I would want to buy with both paws or all four. But I'm not sure that that's going to happen. If the Powell put, there could be a Trump put. We'll see. If the markets show signs of interpreting bad news as good news, I probably want to go ahead and start deploying some of that cash in the near term. I'm not talking next year or something, but in the months immediately ahead. And right now, it's with gold over 3,300, it's hard to find what I would call a legitimate bargain, an overlooked gem. If you've got a gold stock that hasn't budged at all, and gold's gone up and the gold stock hasn't, but there's probably something wrong with that story. There's a reason why that stock hasn't moved. But if I could find one that I thought was the real deal, overlooked gem somehow, I would be willing to buy that stock today. Well, it's Good Friday, but you know what I mean.
definitely. And when it comes to copper, I know that you have talked about how for 2025, this is your number one conviction trade. It's done pretty well since the beginning of the year. It sold off dramatically, though, when we saw that, the tariff scare and all of that, but it's rebounded quite well. So your current state of this copper market in your view?
Yeah, I'm getting close to ready to deploy in the space. My view is still the same. I was not surprised by the big correction that we saw in copper. That was basically what I was, why I hadn't deployed. As your audience may recall, when we spoke about this before, I said, yes, copper is my top pick for 2025, but I'm not buying yet because I expect Trump shock to send industrial minerals lower first before the inflation and supply constraints and things kick in to push copper higher. So that's still unchanged. And I can't say that I'm pleased to be right about this because the amount of pain being caused to make me right about copper selling off is not good for people. But I don't think it's done. I think it's premature to say, okay, Trump's backed off from the reciprocal tariffs, 10% as we can live with that. I mean, I jokingly dismissed China from the conversation earlier. Like, even if the rest of the tariff stuff just all goes away and all we deal with is China, that is huge. We're talking about the world's number one and number two economies in a full-blown trade war, really. I mean, it's not just the tariffs. It's bans on exports of critical minerals. There's other tit-for-tat things going on. I mean, the de minimis thing with the packaging, the deal-making for what's that social media platform that I don't use, and that's why I can't remember, that they're trying to force the Chinese to sell? TikTok, right? I knew it wasn't Instagram, right? Right. So there's all this stuff going on. Let me put it this way. All of this may seem like Trump is crazy, or maybe we just don't understand his 4D chess. Take your pick. It all seems very confusing. But to give credit where due to my fellow Puerto Rican here and friend Brent Johnson, the dollar milkshake guy, it makes a lot more sense if you stop looking at it as an economic issue and start looking at it as realpolitik, geopolitics, politics. If the U.S. wants to be the number one superpower in the world, and China's the rising challenger, and you're the president of the United States and you want to oppose that, what are you going to do? This is not just an economic question. So, imposing, huge tariffs on steel and aluminum may seem like crazy, right? It doesn't make sense because it's making everything more expensive in the United States and it'll be years before we build up these industries. But if you're looking at China as a geopolitical opponent, well, that includes military, and you need a steel industry, right? You need the auto industry. You need all these things that have military applications. And I'm not the only one saying this. Doomberg has talked about it as well. So what I'm saying is, and the relevance to your question is, if Trump's goal here really isn't about tariffs or even fentanyl or whatever the excuse is, but it's about rebuilding America's industrial might to as a base for military prowess in the future, as a base for geopolitical dominance in this century, well, it actually kind of all starts to make sense. All of these actions fit this pattern. And if that's the case, this is an if. I can't read minds here. I don't know what Trump's thinking. But if this is what's really going on, it's not going away. It is huge. There will be massive dislocations, and it's started already. This isn't an environment where I want to rush out and buy anything industrial. I mean, at some point, if U.S. industry is booming and so on, that will be a great idea for various things. And I think even before then, there will be inflationary impacts, which is why I made my copper call last year. But in the near term, we're talking about a massive, massive disruption of the world order and the way business has been done for decades. And that makes me cautious. So let's see. I mean, in that context, like if you think, big sigh of relief, the reciprocal tariffs are gone, we can deal with 10%. But that's thinking about it as a trade war, as a tariff war. But if you think about it in the geopolitical sense, the work is nowhere near done. The next Trump shock could just completely blow the market's expectations out of the water. In that context, I'm reluctant to buy any industrial metals like copper. So what would make me want to go long, or what would make me start wanting to deploy in copper or other things like that, would be to see that things have sort of settled down on a track. Like the Trump agenda is now clear and the markets are pricing it in. In that context, where I'm just less fearful of another Trump bombshell. Wake up and, what's after Liberation Day? I don't know, Judgment Day. When I'm not worried about waking up to that headline, then that's when I probably will be looking to deploy cash in that space. Meanwhile, I'll still be looking for opportunities in the monetary metals, in which I include silver. And uranium is different. Unlike other industrial metals or minerals or energy minerals, it's recession resistant, and the supply constraints are, I think, real and now. Like the new mines coming online. I know we're going to ask about this, so sorry not to give you a chance to ask about it, but I'll keep going on this because I do think this is important. Uranium really is different. And I have been concerned about Trump shock here because he keeps talking denuclearization. And so far, my caution has done me fairly well. Uranium has continued to go lower than the incentive price, I think, for the uranium miners. But that denuclearization talk, it doesn't really seem to be going anywhere. Whereas the build out of nuclear power, that is pretty high on the Trump agenda. And it's not just Trump himself, though he does mention it. It's the people around him, Besant and others around him, talking about this. His energy guy, I forgot the name of the energy guy. This is a high level agenda item. And clean, beautiful coal, some people now see that as a threat to uranium. No, that's in addition. None of the people in Trump's inner circle are saying, oh, it's going to be coal instead of nuclear power. It's coal in addition. And, when Trump does talk in almost every press conference, he airs his grievances and he talks about his great deals, including these new, mega deals with tech companies that are going to build their AI centers and they're going to build their own power plants. And as we know, that can be clean, beautiful coal if you like, but we know that the, Microsoft and Oracle, they're looking at SMRs. They're looking at nuclear. So I'm closer to pulling the trigger on uranium, gold and silver than I am copper at this time.
It is kind of interesting how much uranium has fallen. It seems to have, lost pretty much all of its gains over the last year or two here, because we saw, last year, or was it a year and a half ago, uranium really skyrocketed, but now, we're back to where we were before. So what is the reason for this huge decline in uranium prices?
Yeah, well, I will admit that it has declined more than I'll expect. I have to say also, though, in January 2024, when all the uranium bulls were saying to the moon, I was saying, hey, $100, some correction here, just not an unreasonable thing to consider. So I was right about the correction. I would say, honestly, not to sugarcoat anything, I was wrong about its severity or duration. I did not expect Trump to make things worse with the denuclearization talk. I did not expect Kazatomprom to be able to ramp up as much as it has, the world's largest and lowest cost producer. It was having all kinds of problems, and they seem to have partially overcome those, even partially more than I thought. But it's worth reminding the audience that Kazatomprom moved the goalposts, right? They kept missing how much uranium they were supposed to produce, so they cut that guidance. And so now, hey, yay, we're beating guidance. That we are still below production levels that they had previously guided for. So it's not like there's this huge flood of new uranium coming out of Kazakhstan, but they did ramp up more than I thought. So in some ways it's reasonable, but in other ways it's not. It's gone on more than I thought, but here's a key point. That's spot uranium. And the spot market is subject to headline news, headline-driven stuff. It also has other secondary suppliers. If you're one of the several uranium companies or uranium developers that bought uranium when it was cheap, inventory, in order to sell it later when you were building your mine. Well, some of those people are doing that, right? They're building their mines and they need that money. So there is secondary uranium coming to market, but this is not some giant new supply source that's just opened up. It was somewhat predictable. But my point, though, is that this sort of thing affects spot. It doesn't affect the long-term contract price, which is the real uranium market, if you will. And that has held up. The volatility we've seen has been in the spot market, which of course has affected the share prices of the companies. But the real market, the long-term contract market, it hasn't continued soaring, but it hasn't rolled over and gone south, and in a significant way either. It's still holding. So what would make me wrong, Elijah? If long-term contract broke down in a big way, I'd have to say I overestimated this market. That hasn't happened. The volatility in spot, in my view, is just a source of opportunity. I've been struggling with my discipline because things have gotten cheap enough that I've been wanting to buy. I was just, again, not hoping for clarity, but maybe a little more clarity from Trump on this, or at least for him to stop scaring the market. But I'm pretty close. I mean, there's a lot of bargains out there. And, spot has actually stopped falling. That's not the same as recovering, but it could be carving out a bottom here, and that would be very bullish.
It does seem like uncertainty might be the word, right, for these times because of obviously the administration and, how Trump acts, which in some sense might be a good thing. Sometimes it's hard to invest in that environment, though. So we really appreciate your time, Lobo. I hope you have a fantastic, Holy Triduum Easter there in Puerto Rico. So any last thoughts before we let you go?
Power's back on. So the odds are good on that one. Thank you, Elijah. I guess just one thing. I'm not going to give you a sales pitch. I have been saying this in several recent interviews, but you have a different audience. I just think this is really important. When we have times like this with so much uncertainty, so much market volatility, the market is giving us an opportunity to do some introspection. When things don't go the way we thought, you pull your hair out, actually, this is a good time to look at your emotional responses. And if you find yourself freaking out or succumbing to FOMO or panic selling or things like that, you really ought to pay attention to that. You really ought to think about what kind of investor you are, what kind of things you should be invested in. If you're making decisions, you have remorse, buyer's or seller's remorse the day after, maybe you shouldn't be in junior mining stocks. Maybe you should stick with the ETFs or the majors or something like that. This may sound like mushy pop psychology, but I really, this is actually very important. This may be the single most important determinant in investment outcomes for people. It's not the advice from gurus or due diligence guys. It's your own capacity for staying with your plan, the diligence to see through your investments. So, it's a painful time, but, as life often does, pain is one of our best teachers.
And in the description of this video, they'll be able to check out, our viewers will be able to check out independentspeculator.com if they want to sign up for your work. Can you tell us a bit about that?
Well, you just did. My standard pitch is there's a free weekly newsletter called the Speculator's Digest. You can sign up, see if you like the way I think and the guidance that I offer. And if you do sign up, can't guarantee you'll like everything you read, but I can guarantee I will not flood you with daily advertisements. I hate that kind of spam.
Fantastic. Well, thank you so much, Lobo. You have a fantastic weekend and God bless.
Thank you, Elijah. You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for April 14th through April 21st, 2025, while supplies last. First this week, we feature 1-ounce silver Canadian maples at their lowest premium in years at just $3.49 over spot. Next, 1-ounce gold Philharmonics are only $65 over spot. 1 10th-ounce Platinum Britannia are just $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.